Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Monday to you, and a warm welcome to a brand new week as we are going to be getting ready for another trading session. So before we kickstart today's trading session, let's quickly confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing hi. So I would love to see some feedback, please, while I load up my comment box. Thank you very much as you do so. Okay, so I can see a handful of comments here. I see Henry one in town. I like that name. Good morning to you. DB, good morning to you. Fufarion, good morning. Ojo Rain, good morning to you. Glad to have you guys around this morning. So I will take this comment as a positive feedback that we are good to go this morning. So once again, you are very much welcome to yet another promising edition on the Extra and Speed Live. My own name is Sheriff Daramola. And in this episode, we will be delving deep into the current market structure from a technical perspective, blending our analysis with the key fundamental factors that may influence the price of the assets on our watch list for this week. And of course, armed with fundamental tools such as trend lines, key levels, and chart patterns, we aim to unravel the potential trajectory of price action in the days to come. Well, for this week, we have a handful of assets which I will love to share with you guys this morning. However, considering today being the first trading day of the week, you have the privilege of sharing with me whatever assets you want us to look at for this week. So if you have any assets, be it cryptocurrency, options, currency pairs, and of course, commodities, whatever you have out there, feel free to drop them in the comment section. And trust me, I will try as much as possible to incorporate it into our plans for this week. And of course, throughout the week, we will continue to monitor this asset. So while I wait for any comments or any assets you want us to have on our watch list, I would like to welcome those of us who are joining us for the first time. So for those of you who are joining us for the first time, you're highly welcome on board. And I'm very excited to have you around with us this morning. And you might be asking, what is this all about? Why are you here? And what is this platform all about? Well, as technical traders, we usually gather here on a daily basis in anticipation of both the London and the New York session, where we come to review the existing positions if we have any, and of course, position ourselves in such a way that we can capitalize on any potential opportunity ahead of the New York session. Usually, the session kickstarts 10 a.m. UTC, 11 a.m. West African time. And I recommend that you stay tuned in during this time so that you don't miss out on the insights that we will be deliberating on today. Our aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you. So with that being said here, and in the absence of no assets to look at, so we shall be diving right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. So, on the economic calendar, based on the assets we will be looking at for this week, we're usually going to be going through the US All Spot, the US Tech 100, the GBPUSD, and of course the XAUUSD. Now, based on this asset we have on our watch list, we will be focusing on both the United States and the United Kingdom economic dockets. Now, for today, Monday, November 13th, we do not have any high impact event from these economies. But what I did here was to include the medium impact event. Of course, we do want to have an insight into the fundamental factors that will be driving the market sentiment for today. Now, the first event for today is the Bank of England's Dr. Catherine Mann. She is the monetary policy. She is a member of the monetary policy committee of the Bank of England, and of course, she's going to be giving a speech in about 5 to 6 hours from now. And of course, majority in the market will be looking forward to the speech, as it will be giving us an insight into the monetary policy of the Bank of England, and of course, giving us an insight into the health situation of the United Kingdom. Then later on today, in about 8 to 9 hours from now, we are going to be witnessing the publication of the monthly budget statement, which summarizes the financial activities of the federal entities, disbursing officers, and the Federal Reserve Bank. Usually, a positive budget statement that receipts exceed budgetary outlay is seen as bullish for the US dollar, and on the other hand, a negative figure or deficit indicates government debt and is usually seen as bearish. Now, if we look at the previous data for the month of September, it actually came in at a deficit of $171 billion. However, considering the expectations for today, we have economists projecting a deficit of $30 billion, which is way below of the previous data, which is something a little bit positive, but we're still within the red zone at this point in time. So we'll look forward to see what the actual data is going to be like. Will it be just as expected, below expectation, or even beyond expectation? And of course, as technical traders, we do know that the anticipation of this event usually affects the market sentiment, and of course will reflect on the chart as price action. So talking about price action, we will be diving right into the business, and the first asset on our watch list for this week is going to be the US All Spot. And as it is right now, I'd already taken advantage of a buy opportunity, and in fact I would like to share with you how we got to this point. Now, to do this, we want to scale up into the higher time frame to see how the market is doing from an holistic perspective. And of course, for those of us who have been with me in this community for a while now, even last week, we had a phenomenal move as we rode the bearish momentum after price broke down the $80 mark into the $75 area, giving us over 1,000 pips with multiple entries on this asset. It was a tremendously profitable week for us last week, and let's see if we can actually replicate what we did during the previous week. Now, on the daily time frame, what I did here was to take into consideration the nature of price action in the last 4, 5, 6 months now. That is from the month of July. And in fact, I have a couple of levels here that we will be using to guide our decisions for this week. Now, the first level I want to emphasize here is the lowest point price action has been during the course of last week, and that is the $75 area. Now, the second one here is going to be my key level, which is situated at the $80 area. And remember, this level was broken to the downside last week. Now, despite the strong bearish momentum that broke the $80 mark, we saw how price action, as soon as it tested the $75 area, we begin to notice some buy pressure resume around that area. And in fact, it is worth noting here that this level at the $75 area has a memory for buying power. In fact, if we go to as far back as the month of July, we saw where the current bullish momentum began from, and right now price is back into that structure. Now, another key thing about this area is the breakdown of that key level at the $80 mark, as you will see here. And in fact, when you know from a technical standpoint, whenever price action breaks down a key structure such as this, we expect that some point in time price will come back, maybe to do a retest of the structure in anticipation of a downtrend scenario. Now, this is going to be looking more like a counter trend opportunity after noticing some buy pressure here since Wednesday of last week. And in fact, if we consider the distance between where price started this week and the $80 mark area, we have roughly about 350 pips to catch here. And in fact, if price will be doing a retracement back into the structure, it is a move we also want to be part of. Now, in that regard, let's see how the market participant has been reacting to that $75 area since last week, Wednesday. Now, to see this, we will scale down into the 4 hours time frame where we'll begin to see things more clearly. Now, on the 4 hours time frame, I took into consideration the nature of price action throughout the month of October. And it's quite clear that price action was bearish. At least we had some lower highs here, giving us a couple of descending trend line to work with ahead of this week. Now, this trend line, this bearish trend line here, incited that move that broke down that $80 mark, as you will see right here. Now, as soon as price got into the $75 area on the 4 hours time frame, we begin to notice the emergence of a reversal pattern in the form of a double bottom structure. Now, if we look at this closely, considering the impulsive move that broke down the $80 mark, you will see price dropped into the $75 area, came back into the $76 level, and then the inability of price to break down the previous low, leading to an higher low, resulted into a reversal pattern. And of course, you know how we do it in this community. As soon as we identify a technical reversal pattern, the next thing we want to be doing is to mark out the neckline of that pattern, which interestingly falls along the $76 area. Now, with this neckline marked out, we need a validation, and the validation will definitely come in the form of a breakout and retest of that neckline to incite a buying opportunity. And this is exactly what happened. You saw what happened here on Friday. Price broke out of the neckline, came back to retest the structure, and boom, you can see price continues to climb to the upside. So right now we have a validated reversal pattern on our table right now. So let's see how we can capitalize on the next move from here. Now, what we want to be doing now is to monitor the character of price action since the beginning of this week. Let's see how participants have actually reacted to this current market structure. Now, scaling down into the 1 hour time frame, we get to see the nature of price action since this new week began. Now, if you look at the structure here, the first thing you will observe was a bearish gap. As you all know, price action closed last week around the $77.40 level. However, price resumed this week around the $76.75 area, giving us a huge bearish gap, which further reveals the nature of the institutional sentiment during the course of the weekend. Now, with the situation we have here, we saw price fell into a consolidation phase. We saw price drop into the $76.35 level. Price came back into the resistance line along the $76.75 area to give us a flat channel to work with ahead of this week. Now, you know how we do it in this community, especially when we identify a flat channel which emphasizes the level of uncertainty in the market. We usually exercise patience and wait for either the breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And in addition to this range that I identified this morning was the ascending trend line that was supporting the bullish momentum that started on Wednesday of last week trading session. And for the fact that price action still remains above that ascending trend line, it makes quite a lot of sense to look out for buying opportunities at this point in time. So in that regard, I had a buy stop order seated above the $76.75 area, which triggered my first buy position for the week. And for those of you who were able to capitalize on this opportunity, well done and kudos to you for being on standby, as currently price action is running with about 48 pips in profit at this point. So well done once again to you if you took advantage of this move. However, for those of us who had missed out on this opportunity, it's okay. The week is still very early and we still have quite a lot of time to look out for new opportunities. So in this regard, after missing out the breakout of the $76.75 level, I will advise that we exercise patience here and wait for new structures to emerge before we jump into any positions here. And of course, we do know that from a technical standpoint, that whenever price breaks out of a key structure such as the $76.75 level in this case scenario, we should be expecting that some point in time price may likely come back, maybe to retest the structure that was broken to incite an uptrend move. So if you had missed out on the first breakout, let's see if the market will come back and retest the structure. Now, if price comes back, we want to be looking out for signs that sellers are finding it difficult to push through this range, and of course this will reflect on the chart as continued buy pressure, higher lows, or any form of reversal pattern to give us the privilege of joining that uptrend continuation. However, it is not all the time that price action usually comes back to retest the structure, as it may continue to find new highs. Now, in that regard, we have another level at the $77.50 area, which happens to be the highest level for Friday's trading session before the bearish momentum began here. So if price action will continue in such a way that it breaks out and retests the $77.50 level, for those of us who have a buy position running, this will welcome more buying opportunities. But for those of us who are new, another breakout retest of this level will welcome buying opportunities here. Now, in as much as we're looking out for buying opportunities on the US All Sports, you know how we do it in this community. We usually want to also keep tabs with the opposite direction as well. Sellers could still have a say in this market. Remember that throughout last week, we saw a very strong bearish momentum to the downside. And in fact, it could still continue considering the institutional sentiment that happened through the course of the week, as we saw a bearish gap here. Now, if we are going to consider selling on this current market structure, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, I doubt if this will happen today anyways, but if it does happen, we want to be on standby to capitalize on that one. So we are going to be using this ascending trend line to guide that decision if we are going to be selling. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we continue to look out for patterns and structures that supports the idea of buying that asset. Now, the only condition that will make us consider selling here is for price to break through the ascending trend line to the downside. Then at this point, we want to start considering selling. However, it is important to note here that we are not jumping into a sell position right away as soon as price break down the ascending trend line, because the breakdown here could still turn out to be a false breakdown. And considering the fact that we are within something that looks like a reversal pattern, we need some confirmations to happen, which will of course reflect on the chart as the inability of buyers to be able to climb back above the ascending trend line, and then you will be seeing something like a retest of the structure, continuous selling pressure below it to incite an opportunity to sell. So these are the scenarios I will be looking at here for me to consider selling the US All Spot for today. So we do want to be marking out this level on this chart as we have a very simple setup we will be using to guide our decisions for today. At this point, I still hold on to a bullish bias, and the only condition that will make me consider selling is for the trend line, the ascending trend line, to be broken to the downside. So these are my views here. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next assets on our watch list. So the next asset on my watch list for today is going to be the USTech100, and in fact, since the beginning of this week, price action is currently, though the week started on a bearish note, but price action is looking as if it is in a channel at this point, which further emphasizes the level of indecision at this point in time. As we navigate this landscape, we face a divided opinion amongst investors and market participants, with some anticipating higher rates for an extended period, potentially leading to increased price volatility. How should we position ourselves in the face of this uncertainty as we approach the first New York session for the week? Well, before we can identify potential trading opportunities here, it is very important that we have an holistic perspective into the current market structure to have an idea of where price may likely go for this week. And to do this, we will be scaling up into the higher time frame, which is a daily time frame, of course. And remember that last week also was a phenomenal week for us on the USTech100, as we took advantage of that bullish momentum all the way to the breakout of the key level at the 15,300. Now, to refresh our memories on what we saw here last week, well, the current structure still remains the same, as we all know that since the beginning of this year, price action has been on a strong bullish momentum. And to further emphasize the strength of the buyers in this market, remember that we connected a series of higher lows, giving us this beautiful ascending trend line, which has been supporting the buying idea we have been enjoying since the beginning of this year. And not until about 3 to 4 weeks ago, we finally saw price break down that ascending trend line for the first time this year, though this breakdown didn't come to us as a surprise, as we already anticipated it after noticing how price action was finding lower highs in the last 3 to 4 months. Now, with the situation that happened here a couple of weeks ago, breaking down the ascending trend line, usually from a technical standpoint, we expect that price will come back to retest the structure, which was actually the idea behind buying this asset in the last couple of weeks. Now, price is supposed to, from a technical standpoint, come into this area where the ascending trend line and the descending trend line, and of course the key level at the 15,300 shares a beautiful confluence where we were actually expecting continued selling pressure to signal a bearish move to the downside. However, something interesting happened here between Wednesday and Friday of last week. We saw a little bit of consolidation phase before price action finally broke out of that 15,300 area. Now remember that this area has been known to be a strong selling niche in this market. In fact, if we go to as far back as the month of June, we saw how sellers has always negated all attempt by the buyers to break out of that structure. Though we had some situations where price broke out, of course, but we saw price drop to the downside back into the area. Now, the interesting thing about the structure is the breakout of that 15,300, which happened on Friday. And in fact, the breakout was characterized by an engulfing bullish candle, which makes a statement that buyers are getting stronger. Now, with the situation we have here, there are two ways to which we can capitalize on the next move. The first one is the technical expectation of price coming back to retest the structure, which is an idea we want to be putting into our watch list for this week's trading session. That's one scenario. Then the other one that could happen here is price may drop down and even break down the 15,300 to incite a downtrend move. Now, if price does not decide to drop into the 15,300 and instead continue to form a consolidation phase here, then we might likely be seeing an uptrend continuation pattern that will incite an uptrend move. Now, for us to be able to get ready for today's trading session, we do want to see how market participants will be reacting to this area. Will the character of price action during the first 10 to 12 hours of this week incite a reversal pattern that will push price down, or will it evolve into an uptrend continuation pattern? Well, for us to have a decent view into what is going on here, we will want to scale down to the 1 hour time frame so we can dissect how market participants have been reacting to this current structure. Now, if you look at what is going on here, you will see that since the beginning of this week, after price tested the 15,530, this was here on Friday, we saw price drop to the downside, coming back into the support line here at the 15,445, where the resumption of buy pressure resumes here. So at this point, I have a range which we will be using to guide our decisions for today's trading session. So what we are going to be doing here is to use this range as a guide. As we can see, price is currently confined within the 15,530 and of course the 15,445 area. And of course, you know how we do it. Whenever price action falls into such a range, we want to exercise patience and wait for either the breakout retest of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. So with the situation we have here, let's see how the market will go. Well, personally, if you would ask me, I'm of the opinion that price action will continue to the upside, especially after considering the impulsive move that brought us into this point. And in fact, the tendency or the chances for this situation here to transition into an uptrend continuation pattern is higher. Looking forward to the breakout of the 15,530 to join an uptrend move. So in that regard, I'm having a buy stop order sitting above the 15,530 to capitalize on the uptrend continuation. Now, in as much as we're looking out for buying opportunity, you know that the new week has started on a bearish note, and we might likely be seeing a situation where some profit-taking activities will come in, as we all know that throughout the last 2 weeks, price has been climbing to the upside aggressively. And for those major key players in the market who had bought these assets at a cheap price, may at some point in time want to start considering closing in some of their positions to make some profit off it. And if that is going to be happening, then we might likely be seeing this reflect on the chart as a retracement phase. And in that regard, if price will break down the 15,445 level, we are likely going to be seeing a downtrend move. And then remember, we have our key level situated at the 15,300 area. So if we are going to be selling and price breaks down the 15,445 area, please note that as soon as price gets into the key level at the 15,300, ensure that all your stop losses have moved to break even or lock in some positions, because we do not know how the market will react to the key level at the 15,300. Now, depending on how market participants react to this level will determine if we are going to be adding more sell position or get ready for a buy opportunity. So if we see a situation where price breaks down the 15,300 retest of structure, this will welcome more opportunities to add to the existing sell position. However, if price action evolves into a reversal pattern, maybe forming a double bottom structure, head and shoulder pattern, or whatever case reversal pattern is from there, then this might be the beginning of the second wave of the bullish momentum that broke out of the key level at the 15,300 area. So this is how we are going to be maximizing on any potential opportunity based on this current structure. So basically, going into the New York session today, our center of focus will be between the 15,530 and the 15,445 level. So let's see how the market will play out with the structure, and depending on the direction of the breakout will signal where we want to be going for today. So these are my views on the USTech 100. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So, in the absence of no questions and because of time, I want to make sure that I at least take the minimum of 4 before the next hour. So in that regard, we will be moving on to the next asset. But if you still have any questions whatsoever, feel free to drop them in the comment section. I will be checking the comment box from time to time. So with that being said here, let's move on to the next asset on our watch list. So the next asset on my watch list for today is the GBPUSD, and in fact I already have a buy position running at this point in time after taking advantage of both the breakout of the 1.223 and of course the 1.22375. Now, what is really going on in this market, and how do we intend to capitalize on the next move? Well, looking at this current structure, the GBPUSD appears to continue its upward trajectory, which of course we knew started on Friday, reaching around the 1.223 during the Asian session today. Well, for me, this uptick could be attributed to the support gathered from the better than expected GDP data released by the United Kingdom last week Friday, as market participants digest its implications. Looking ahead, focus will be on the upcoming United Kingdom economic docket revealing employment and inflation data tomorrow, which is Tuesday. And concurrently, we are also looking forward to the US Consumer Price Index, which will be some crucial factors to determine how the market will be reacting this week on this asset. Now, before we go into the details and what led to the idea of buying this asset for me, let's quickly run through the higher time frame so that we can have an holistic perspective into what is really going on in this market. And to do this, we shall be starting from the daily time frame. And in fact, on the daily time frame, I have a simple setup here where the most important factor is the key level I was able to identify around the 1.2200 area. Now, if you look at this key level here had played a major role in determining the direction of price action in the last 1 year. In fact, since November 2022, you can see how this level had played a major role in either pushing price to the upside or to the downside. Then fast forward into the month of March of this year, we saw that since price broke out of this area, you can see that range between the 1.2200 level and the 1.20100 area had been a strong demand zone. As you will see, every attempt by the sellers to break through this area has been met with strong resistance from the buyers. And fast forward to throughout of the month of October, we saw buy pressure here, despite the strong bearish momentum. The inability of sellers to break through this structure for me is a red flag. Now, despite the lower highs, we can see price is here to break through that structure, and in that regard, I'm of the opinion that price is likely going to climb up and of course break out of those descending trend line we have marked there. Now, let's zoom right into the current structure. So we saw what happened here a couple of weeks ago where price broke out of the 1.22 area, and throughout last week we saw the bearish momentum, which was more or less could be considered to be the retracement of the impulsive move that started 2 weeks ago. Now, with the situation we have here, will this be a retracement that will incite an uptrend, or are we going to be seeing price break down of this demand zone to push price to the south? Now, I have a simple setup on the 4 hours time frame which further emphasized the importance of that impulsive move that broke out of the key level at the 1.2200 area. So here on the 4 hours time frame, I captured the trajectory of that impulsive move, as you will see here. And what I did is, whenever price action breaks out of a very key structure such as this, we expect some profit-taking activity to paint a scenario where price will come back to retest the structure that was broken, then incite an uptrend move. So what I did here to project where the retracement phase may likely end was to use my Fibonacci retracement tool, run it through the previous impulse leg, and aim at an area between the 50 and the 78.6% of the previous impulse leg as an area we want to be looking out for buying opportunities. Now, since price broke down the 50% retracement of the impulse leg, I didn't consider that, so I just moved the zone to be between the 61.8 and the 78.6, which actually lines up with our key level and the 1.21450 area. Now, one interesting thing about this zone is how it shares a beautiful confluence with this ascending trend line. So everything right here is screaming bullish for me. And for the fact that price still remains above our key level, and the ascending trend line, and in fact within that potential buy zone area, I have no other choice than to continue to look out for buying opportunities from this current market structure. And the only condition that would make me want to sell here is for price to break down the ascending trend line and of course the key level at the 1.220 area, where a retest of structure will be a beautiful confirmation to join a downtrend. However, since price still remains above our ascending trend line, our key level, and above the potential demand zone here, let's look out for buying opportunities at this juncture. However, before we can start looking out for buying opportunities, we want to see how market participant has been reacting to this current structure since the beginning of this week. Now, to do this, we want to scale down into the 1 hour time frame where we will begin to see things more clearly. Now, on the 1 hour time frame, this was what I saw here on the 1 hour time frame. The first thing first here is an ascending trend line, which I duly marked out, which will be guiding our trading decisions for today. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we look out for patterns and structures that supports the idea of buying that asset. Now, in addition to that trend line is the fact here that the market was a little bit in a limbo throughout the first 10 to 11 hours of this week, as we saw price action trapped within the 1.22375 and of course the 1.22225 level. And of course, you know how we do it in this community, especially when we have a range like this, which emphasizes the uncertainty in the market. We exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. And personally, if you saw my 4 hours time frame, you saw that I had a level around the 1.223 area, which of course I placed a buy stop order, risking it there and hoping that price will continue to the upside, which it did. And since then, price had continued to the upside, and in fact we also have a breakout retest of the 1.22375 to give me more buy positions here. So on the GBPUSD day to day, I'm holding on to a bullish bias at this current market structure, and I do hope that you're also going to be on standby to capitalize this move. Now, for those of us who missed out on these opportunities, how do we intend to capitalize on the next move? Well, a price still has the tendency of coming back to retest the structure or even coming back into this ascending trend line. So don't let us be anxious. There are still chances that price will still come back into structure to incite an uptrend move. So if you had missed out on that opportunity, you can still bank on the potential of price retracing into the structure. And if price does not retrace back into structure and instead it continues to climb new highs, then we have a level here at this is the highest point price action has been for this week, which is exactly at the 1.22535. So you want to be labeling that area. So 1.22535. All right, 535. So you want to be marking that level out on your charts. So I would like to give this a green color to differentiate it from our key levels, from our resistance levels for this week. So if price action continues to climb new highs and does not come back to retest the structure, then we want to be looking out for the breakout retest of the 1.22535 to add more buy positions to our existing trade. So on the GBP USD, I remain bullish. I continue to look out for buying opportunities here. However, it could still happen that sellers could come in, of course. And we also want to be on standby to capitalize on that one if that is going to be the case. So if it's at any point in time we get taken out of this buy position and price action goes on to break down that ascending trend line, then we can start considering selling. But I would rather want to see price drop through this 1.22225 level, retest of structure before I join the decline to the downside. And please note that if at any point in time this ascending trend line is broken to the downside today and we join a bearish momentum, as soon as price gets into the key level, remember we had this key level at the 1.2200 area on the higher time frame. Ensure you move all your stop losses, secure the current sell position, and look at how interestingly the 1.22 area shares a beautiful confluence with the ascending trend line we identified on the higher time frame. So depending on how price reacts to this area will determine if we are going to be adding more sell position or getting ready to buy. So breakdown retest will welcome sell positions where the emergence of double bottom structures or any reversal pattern here will incite an uptrend move. So let's mark these levels out. They are very, very important as it's going to be playing a major role in guiding our independent trading decisions for today's trading session. So these are my views on the GBPUSD. I remain very bullish here and I will continue to look out for buying opportunities, and I hope you'll be on standby as well to capitalize on the next move that happens. And the only condition that will make us want to consider selling here is for price to break down the ascending trend line. So if you have any questions whatsoever as regards the current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off, waiting for your questions, and you can use that time as well to mark out these levels on your charts as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to take this as a confirmation that we are good to go. So in that regard, we shall be moving on to the last asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we have an interesting situation going on here where price action is currently oscillating within a tight range of about $7 range at this point in time since the beginning of this week. Well, gold grapples to gain momentum during the Asian session with market participants in anticipation of the upcoming US Consumer Price Index, which is of course coming up tomorrow for potential market direction. And of course, it is understandable that when we anticipate such high impactful event like this, we expect price to fall into an indecisive phase. However, from a technical standpoint, let's look at what is really going on in this market from a technical standpoint before we delve into this decision we are going to be making for today. And to do this, we want to scale up into the higher time frame. Let's see what is really going on in this market. Now, for those of you who have been with us in the last couple of weeks now, you'll be very well familiar with this current market structure you are seeing on the daily time frame, as this has not really changed at all. And the most significant factor here on the daily time frame is that descending trend line that has been holding bearish momentum since the month of May of this year. And if you remember vividly, we saw this interesting impulsive move that started at the beginning of the month of October, breaking out of that descending trend line. And as soon as price tested the $2010 area, remember we identified this zone as a very strong selling niche, as you will see how as soon as buyers got into this area, we saw how sellers jumped in to negate every of their attempts. Now, immediately price tested the $2010 area that was a couple of weeks ago, we begin to notice some selling pressure resume. And for me, I want to consider this as the beginning of a retracement phase on the GBP, on the XAUUSD. And psychologically, of course, when people buy an asset at a very cheap price, let's say around the 1,810 or depending, maybe the 1,900, we expect at some point in time there could be some profit taking activities which would reflect on the chart as a retracement move. Now, the question going into the new week is how far will this retracement phase go? How far will it go? How long will it go before the next uptrend move happens? Now, if we consider the technical expectations after a breakout of a key structure as this, we expect at some point in time price may come back to retest the structure, that is the trend line, and interestingly, that trend line shares a confluence with a demand zone, an area that has a memory for buying power. So will price get this far before another wave of bullish momentum will happen? That's one question we want to be answering this week. Or is price going to start the bullish momentum from this 1,945 level, which happens to be my key level for this week? Now, you will see what happened here last week Friday. Price action came into that area and closed around the 1,945. And if we go to as far back as the month of March, you see how the 1,945 had played a major role in determining the direction of price action, as you will see here. So for this week, we are going to be using the 1,945 level as our key level. Now, you know how we use our key levels in this community. As long as price remains below the key level, we look out for patterns and structures that supports the idea of selling. But if price at any point in time breaks out of our key level, we begin to look out for patterns and structures that supports the idea of buying. So the question now is, will buy pressure resume here to incite an uptrend, or are we going to be seeing a retracement back down into the 1,900 area? Now, to guide our trading decisions for this week, I had a simple setup identified on the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action in the last 3 weeks, 3 to 4 weeks now, I think. And if you do that appropriately, you will see how the 1,940, just right below that key level, has been a strong buying niche in this market. So look at what happened here during the second week of the month of October. We saw buy pressure taking price to the upside, and in the last couple of weeks price is back into that area, and in fact we have some consolidation phase going around that area. So at this point everything is looking is screaming bullish at this point, where I want to be seeing a breakout of the 1,945 to incite an uptrend scenario, and the only condition that will make us sell is the breakdown of the 1,930, maybe into the 1,900 area. Now, in addition to all these observation we've just projected here, is another interesting uptrend continuation pattern which I was able to spot on this 4 hours time frame. Now, if we take a closer look at the structure, after considering the impulsive move that brought us into this point, I'm beginning to see a pattern here that looks more like a wedge, or you can call it a flag pattern, depending on the perspective you are looking at this from. And of course, if you look at this closely, theoretically, it is expected to be an uptrend continuation pattern where the breakout of the resistance line of that pattern will be welcoming the buy opportunity. Now look at what is going on here. The 1945 level, which happens to be our key level for this week, is coincidentally sharing a confluence with the resistance line of that pattern. So for me, if price will break out of this pattern, I want to be joining a bullish momentum here. Now that price is within this demand zone at this point, let's scale down into the 1 hour time frame so we can see how participant in the market has been reacting to this current structure, especially when price is within a strong area that has a memory for buying power. Now scaling down into the 1 hour time frame, we begin to see things more clearly, and in fact it's quite clear here that we have an indecision phase going on right now, as price action has been confined within the range of the $1,941.50 level and the 1934 area to emphasize the level of uncertainty going on in this market. And of course, you know how we treat our flat channels. We exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. And if we consider the structures we identified on the higher time frame, which all of them were aligning with the idea of buying this asset, I want to be placing a buy stop order above the $1,941.50 level to capitalize on the uptrend situation here. And if price continues to climb to the upside, breaking out of our key level at the 1945, which I made mention earlier, also shares a confluence with the resistance line of that uptrend continuation pattern, we want to be adding more buy position to our existing trade. So that is how we are going to be capitalizing on a buy opportunity here. And in addition to that one is the potential reversal setup here after considering the impulsive move that brought us into this point and the inability of sellers to break through the 1934 could incite a situation where price transitions into a reversal pattern where the $1,941.50 level would turn out to be the neckline to incite uptrend situations here. So I'm holding on to a bullish bias on the XAUUSD. However, you know how we do it in this community. In as much as we're looking out for buying opportunity, we cannot ignore the potentials that sellers could break through the 1930 that we identified on the higher time frame to incite a sell-off, maybe into that major demand zone at the 1900 area. Now, if sellers are going to take over this market today, what is it that we want to see on this chart that will make us feel comfortable shifting our bias from bullish to bearish? Now, looking at the structure here, I would want to see price take out the support line here at the 1934, which of course has been negating all attempt by the sellers to break through this area since last week Friday. Now, if price will break down that structure, then a confirmation like a retest of structure will be okay for us to join a decline to the downside. And if price action continues to drop, then retest of the 1930 will welcome more selling opportunity. But I still hold on to a bullish bias here. But if price breaks down this range, then we have no other choice than to be part of that uptrend move. And to make things easier for us to identify trading opportunities, we have a temporary ascending trend line here, which can help us to feel comfortable in whatever position we have. So if price remains below that trend line, we know that it's good for us to feel comfortable in a buy position. And if price breaks down the trend line, then we could start considering selling. So these are my views on the XAUUSD for today. It has been an interesting morning. interesting first day of the week, as we have very, very promising setups that we been able to identify ahead of the first New York session for today. So if you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I take this as a confirmation that we are all good to go this morning. And it's on this note, I call it a day here. It has been a wonderful moment with you guys. I really enjoyed every single moment I had with you today, as we were able to take on 4 major assets today, which includes the USTech100, the USOILSPOT, the GBPUSD, and finally the XAUUSD, popularly known as the gold spot. And we were able to identify simple setups using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session. So I do hope you've marked out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. And remember that we want to exercise patience and allow our structures to mature before we jump into any positions. And also remember that every decision you are making is more or less an educated guess. Hence, you want to be having a well-defined risk management approach to protect your portfolio against sudden or unnecessary losses. So ensure you have your stop losses in place. Ensure you have the appropriate percentage risk on your portfolio for every trade you are taking. And for those of you who are joining for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, I encourage you to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information gathered here to make your own independent trading decisions. So once again, I welcome you on board, and I look forward to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and of course get ready for tomorrow's trading session. Remember, tomorrow promises to be an insightful and exciting one, as we look forward to key economic features from both the United States and the United Kingdom economic docket to guide our decisions for tomorrow's trading session. See you all tomorrow, and I wish you the best of luck today. Do have a wonderful evening, everyone. Bye-bye.